Uh, Great intellectuals, how are you doing today? So in today's video, we'll be looking at balance of payments. Before that, how has been your day? Hope you are doing very well, right? Okay, so as I was saying, in today's video, we'll be talking about the balance of payment. So what is it all about? So the thing is that this stuff is pretty much a simple thing, okay? So balance of payment is basically the record of the financial transactions between a country and other countries, right? So that's in Nigeria and Brazil, Nigeria and Cape Verde, Nigeria and the US, on like that. So the record of the financial transactions that happen between Nigeria and other foreign countries. So that record, right? That's the record of the financial transaction. Is called the balance of payment. Okay, so now balance of payment is divided into three components. So the first is the balance of trade, and the second is the capital account, and third is the money movement account, right? Or the yeah, you have the money movement account which you have here. So we're not going to be talking about the money movement account. This video basically is about the current account and the capital account. So what is the current account about, right? So current account as well is divided into two other components, right? So you have the visible trade balance, and the invisible trade balance. So current accounts generally is basically referring to the record of the financial transactions on goods and services between a country and other countries in a given year, right? So the record of the financial transactions on goods and services between a country and another country in a given year. So basically speaking, the formula calculates your balance of trade is exports minus imports, right? So anything that generates income for you, right? Like anything that generates income from you after making them available to foreigners count as your export. So that's a credit to your account, to your current account, right? And then anything that takes money away from you, maybe imported products, for example, in Nigeria, we import cars, import phones, and all of those things. So they are going to go into the debit side, of the current account. So broadly speaking, the formula for current account is exports, minus imports. So I said that the current account is subdivided into two things. So what is the visible trade balance about? So the visible trade balance is just the record of financial transactions between a country and other countries in terms of tangible goods. Tangible, right? For example, marker is a tangible product. This is a tangible product. This board is a tangible product, and all of those things. Textbooks, phone, a cream, a lot of materials that we have in this room, right? And in your room and wherever you are in. So tangible products. So the export and import of tangible products goes into the visible trade balance. All right, it goes into that part of the current account. Okay, that's being said. Then how about this second one, the invisible trade balance? So this is looking at the record of the financial transactions between a country and other countries in terms of services. Services. Okay. So here you're just looking at non-tangible products, right? We'll be teaching services. There are people in Nigeria that school abroad, right? So that's like importation of foreign education. There are people from other countries that come and school in Nigeria. That's like exportation of Nigeria's educational services. So you have consulting services, legal services, marketing services, accounting services, and all of those things. Okay, anything, if shipping services, insurance, and all of those things. So anything that is about service, right? Whether you import service or you export service, that goes into your invisible trade balance. So if you're asked to now calculate your current account, so that's going to be your visible trade balance plus your invisible trade balance. So that's about that. Now, how about the capital account? So the capital account is basically the account of capital flows from one country to another country. Capital flows, like its capital account is just okay, in terms of yeah, it's not like you're buying necessarily. It's not like you're buying goods and services here, but it's more of investing, right? So capital account looks at the investments that goes on. Okay, let me call it investment flows now. The investment flows that go on between a country and other countries. So there can be a capital outflow when a country is investing in other countries, and then there can be a capital inflow when other countries, or when members or citizens or governments or businesses of other countries are investing in your own country, right? So that's what the capital account is about. So you could have you could have capital in fixed assets, you could have capital in terms of stock and bonds, and so on and so forth. So I said we're not going to be talking about money movement accounts. It's just for us to know that okay, these are the three different components. So is there something that I'm probably missing out? All right. So the money movement account is also called the official reserve account. The official reserve account. Okay. What we really want to do, what I really want us to do is to like have exercises on balance of payment, right? So, but before we get to that point, which is where we are soon going to be going to, we have to kind of teach ourselves, some of these components, and then for us to know what is really expected of us to do. By the time we have questions that we have to talk about, right? So I just want to be very sure that I'm not missing something out. Okay, so I was saying that capital account is an account that shows investment um, flows between countries. So it could be capital movements. I just like prefer the word investment movement, and all of those things. But capital movements, so that's fine. So it is the record. It records the flow of money right out of a country in respect to the ownership of fixed assets. The flow of money in respect to the ownership of fixed assets. Factory buildings, all of those things, right? So we have key terminologies that I want us to understand from this class, because by the time we are given a list in our what do you call it now, a list of by the time we're given a balance of payment question, so you have to identify each of the items on it. So what does investment income mean, right? So investment income is basically the income or the reward generated from investing, right, in um from an investment. So let me just put it that way. So investment income refers to the income or the reward generated from an investment. Okay, so what are some of the rewards you can gain from an investment? So you might invest in companies, right? So if you invest in companies, what are the things that you might get? If you happen to be a shareholder, you're getting a dividend. So dividend falls under investment income. And then if you happen to like run the business, maybe you are the one that just happens to have a business in another country, so you're going to be getting profit, right? So profit falls under investment income. And then what if you have is it capital gains? So let's say you invested in stock, you invested in a share, then over a period of time, then the value of the share increased. So that capital gain too is also an investment income. So by practice, you have your investment income under the invisible trade balance. So that's where you have to like fix it. And how about unilateral or unrequited transfer payments? So these are transfer payments, right? So from one country to another country. So in terms of they may be gifts, they may be grants, all of those things. So like just what transfer payments are, right? So they are not for currently produced goods and services. So like the government of a country like giving a grant to people in other countries, or maybe giving a grant to another country, or people in another country, all of those things, right? So all of those is fall under unilateral unrequited transfer. So it becomes a net transfer when you've already done like transfer made, transfer received from other countries, then minus transfer sent to other countries, like so all of those things. Let's say maybe grant received minus grant paid, so it becomes a net transfer. But here these are still like individual units. All right, so I hope you understand that part. So all grants and whatever. So how are they treated under balance of payment account? They also fall under your invisible trade balance. So in case you ask it's an invisible trade balance, and then you have grants, you have gifts, you have unilateral transfers, you have net transfers, unrequited transfers, or any other equivalent that I don't know of right now. Now the next one is error and omission. So these are just balancing items. So if you remember national income accounts, if you've done it before, there's something that we call statistical discrepancy, right? So that's the kind of job that errors and omission is doing in balance of payment. So like you have your credit side. Maybe you want your credit side to be equal to your debit side. Okay. So your credit is like maybe 700 million, the debit is like maybe 694 million. So like the remaining 600,000 is just like it could be an error and omission. Right. So it's just error and omission is a balancing item. Right, in the balance of payment, in the overall balance of payment, you are done with everything. Okay, this is supposed to be equal to this. So just like maybe in computation, in trying to like get the data, whatever, you probably missed out on some key information. So the shortfall is just like, okay, this is probably a result of our own error in calculation or omission in calculation. Just fix it inside. Now, so error and omission. Then this one is like when you are done with the entire balance of your stuff. So how about your foreign direct investment? So it is also called direct investment, right? So direct investment is the investment in the acquisition of fixed assets or fixed capital, right? In countries, right? So let's say I'm in Nigeria. If I want to invest, let me say I may want to extend my company, right? I may want my company to be extended into France, right? So if I go on to build a company in France, right? So that's a foreign direct investment to people in France, right? So there might be an existing business in France, and then maybe I want to become the majority stakeholder, right? So I think something like that happens to Maven's record recently. There was a there's a foreign investment into Maven's record of about $200 million, like, and it was to get the majority stake in Mavis Record. Mavis Record is run by Don Jazzy. I don't know whatever year you're going to be seeing this video, so you may not know anything about Don Jazzy again, or if it happens to be like now. So, like, that's what is. I think I just read the news yesterday, or yeah, I think it was yesterday or 2 days ago, right? So something like that is a foreign direct investment. So like you are trying to acquire, a major stake in a company, right? So that's in a foreign company. You understand? So that's an FDI into Nigeria, for example, worth of about $200 million. Then what else? What else? So you could try to, like, extend the footprint of your business in another country. You could try to like be a majority stakeholder in another company. So you could also decide to, like, maybe it could be through merger and acquisition, right? So maybe I want to, like, I have a company in France, and then there is maybe a competing business, and okay, let me just merge, right? So let us buy out this other guy and then merge it. So we may decide to buy the other guy out, and we may decide to, like, form a merger, right? We may merge, right? And I may decide to, like, buy the guy out, so, like, to totally acquire the guy, or maybe, like, to just form a merger. So all of those things, they fall under, foreign direct investment. So there's a difference between foreign direct investment and portfolio investment. Portfolio investment is basically investment in money and financial assets. Financial assets. So there's nothing like maybe expertise. There's no need for expertise. So when you are looking at foreign direct investment, of course, for me to, like, maybe have a company in France, like, it's not just about spending money, right? So, like, there must also be things about money. I must have management expertise, like management skills. There must be some form of maybe technological transfer that probably happen, you know, in that, kind of, transaction. Like, okay, this is how we do it in Nigeria, so this is how I want it done in France, and all of those things. But when you look at portfolio investment, this one is just about, investing in stock, bonds, and whatever, for the for the pure reason of getting financial rewards. I say that's just it. I invest in your stock, I get reward for it. I invest in your bond, I buy your government bonds, right? And then I get rewarded for it. So that's just it. So, like, someone investing in, you know financial assets of, another country, all of that. So that's what portfolio investment is about. So when you look at FDI, fixed assets, so it is not just money transfer, it's also expertise transfer, and there might be technological transfer, right? There might be human resource transfer. I mean, just, okay, some of the management teams from Nigeria, okay, send them abroad to France, let them train France indigenous that will be working for your company, and then put them through and stuff like that. So, like, for FDI is kind of deeper and heavier than, in terms of requirement, what it requires, than portfolio investment. So portfolio investment is all about investing in financial assets, of a given, country. All right. So how do you treat your foreign direct investment? So this goes into the capital account, and then how do you treat your portfolio investment? It also goes into the capital account, right? But then the returns from your foreign direct investment, if you had the return stated differently in your data, that comes to your investment income, and then that goes into your invisible trade balance, right? So with that being covered, so now the next thing that we are now going to do is to attempt a question, and then you get the answer. So yeah, we have this question here. So the items are, you have merchandise. Merchandise simply refers to visible items, right? So it goes into your visible trade balance, right? In case you don't have, I'm just telling you now. So merchandise is going to your visible items. Then you have shipping and insurance, investment income, other services, unrepeated transfer, direct investments, long-term loans, short-term loans. I think that's all. So the question says we should calculate the balance of trade. All right. So balance of trade is the same as the visible trade balance. So that's another name that could be called. So whenever you're asked to calculate your balance of trade, it's just your visible trade balance, right? And then remember visible trade, right? Looking at tangible items. Okay, just goods, like looking at goods. Now, so which one looks like good here? This is a service. This one is not a good, not. So we only have merchandise, right? So you're going to write the balance of trade. So the formula for balance of trade, in case it is an exam, is you have visible exports minus visible imports. So the only visible item here is merchandise. So the export is the credit side. When you sell, you get money. And this is the credit side. And remember, the values are in millions of naira. So we are having 35 minus 2001. All right. So you could have to extend this import exported merchandise, exported merchandise. Let me just leave it like this because of space minus imported merchandise just because of space. In case it was an examination. All right, because they would have to see all of these things to know the items that you picked and all of that, not just random figures. So you have 3,500 minus 2,100. So this is going to give us 1,400. All right, so since the values are in millions, so this is going to give you 1,400 million, right? So 1,400 million. Like no need to write a lot of stories. Now the next one is B, calculate the current account balance. Okay, now for the current accounts, recall that current account is divided into the visible balance of trade, the visible trade balance, and then the invisible trade balance. Alright, so for the invisible trade balance, invisible now. So invisible trade balance, let me just call it invisible TB trade balance. Please don't write TB, right? In your exam. It's just because of space. So invisible trade balance is going to be invisible exports, invisible exports minus invisible, let me call it IND. I don't know. Some of you might think that's investments. Invisible imports. Okay. Please don't write as acronym in an examination. So what are the invisible items? So we have shipping and insurance, investment income, other services, and then unrequited transfer. So we have one, two, three, four. So an easier way to do this, right? An easier way to do this is just instead of writing up the items like one after the other, you can put them in a tabular form. So under invisible trade balance now, so we just have a table. We just have a table like this, so where this is like the credit side, and then this is the debit side. All right. Then we begin to list the items. So we have shipping and insurance, shipping and insurance, right? And then we also have investment income, investment income. We have other services, and we also have unrepeated transfer. Transfer. So all of these items then, if you look at it, 240, 240, 280, 360, and then 630. So just kind of add everything together. Then the debit side, we have which is the imports, 450, what do you call it now? 180, 180, then you have 470, 470, and then you have 700. 700. So when we add up, 240 plus 280 is 520. 520 plus 360, that's 880. Then 880 plus this guy, so that's like 1510. It's no, yeah, 1510. So 880, 00, 8 plus 3, 1, then 8 plus 6, 14, yeah, 1510 million. Then this guy, 450 plus 180, that's 630. 630, this is 1001. 1001 plus 700, that's 1800. 1800. Right. So our invisible trade balance is now going to be, where can I erase? It's going to be 15. Is this really correct? Yeah, 1510 minus 1800. All right, 1510 minus 1800. So we have invisible still under this 1510 minus 1800. So we'll be having a minus 390 million naira. Something. Yeah, I think it's 390. So what do we have in case is it 390? A minus 290 rather. Okay, a minus 290 million. Yeah, so that's it. That's it. Very cool. Very cool. So the next question now says that which I've not written here. Oh no, we are not done. We are not done. The question says we should calculate current account balance. So for us to get the current account balance now, so we need to add the um the balance of trade, which is the visible trade balance, to the invisible balance of trade. So current account balance is I think let me just erase, let me begin to erase little by little. So you are also going to write the formula of that one. So current accounts equals to visible trade balance. So equals to you can call it BOT plus, because all of these things are going to be taking marks, invisible trade balance. So current accounts is the BOT gave us uh 1,400. So we have 1,400 million, then plus this one just happens to be a negative number, minus 290 million. So this is going to give us 1,110 million naira. Everything is in naira, right? So yeah, that's our current account balance. So you can say it's not really a difficult thing. Not really a difficult thing. So the next level we are going to now is our capital account balance. So you have two more questions. So we have the capital account balance, right? And then we also have the balance of payment. Okay, like the overall balance of payment. You can actually get the overall balance of payment from just this, right? So what is it about? The credit side, add everything, right? Then minus the debit side. So when you add everything here, you add everything here, subtract them. That gives you a balance of payments, account, right? Simple, because all these items are on balance of payment anyway. So add this total, add the other guy total, subtract credits from the debit side or export minus import, like generally. Okay, so now um let me erase this for us to be able to get. So now if you look at it, we have capital account. So now for capital account we need direct investment, long-term loans and short-term loans. So which means we don't need one, two, three, four. I can erase all of that. So capital accounts. So capital accounts. Account. So its own formula is a capital inflow. Capital inflow inflows minus capital outflows. All right. So items. I think was this our credit side? This was our credit side. And this is debit side. All right. So just add up these three guys. So you can draw another table for this. So let's say this was the table that we're drawing for this account. So I don't want to like erase it. Now we just add up 780 plus 550 plus 220. So this is 770. This 770. This should be 1550 or thereabout. So our capital inflow is 1550 minus. Then you have 440 plus this. That's 1020. 1020 plus 640, 1660. Yeah. Yeah. 1660. So 550 minus 660 is looking like a 110 to me. Is that the answer? Yeah, 110. So this is minus 110 million naira. So telling us that there was more of capital outflow from the Nigerian economy than there was capital inflow in that particular year. This balance of payments was poor. Now the last thing is the balance of payments. You know, balance of payments accounts in total. Okay, since I've erased the other part of this, and then the next that we have here, we have the what do you call it now? We have current account. So this is just current account balance, current account, plus capital account. We don't have any money movement account here or official reserve account item. So the current account gave us 110 million. So that's 110 one one 1110 million minus plus minus 110 million. So this is going to give us 1,000 million, right? That's about a billion. So did I even do it? Where's the account balance? Where is it? Yeah, 1,000. So this is 1,000 million naira. 1,000 million naira. Okay, so that's it. So you are done. You're done. So current account, capital account, and balance of payment. So you can see that it's really easy to understand. So the next thing that we are going to is an assignment. So if you have any question, of course, the comment section is there for you. I'm going to respond to you as quickly as we can. Right? So let's get right into the assignment. Of course, I had you. Should I taught you a simple thing, but I was going to definitely give you a difficult question, right? I knew it. I had you. Anyway, the question is not a difficult one, but it's going to require a little form of research and all of that. So given the table below, answer the questions that follow. The values are given in thousands of naira. So you have merchandise 50 and 40. So you have receipts and payments here. So you are going to figure out which should be debit or credit or whatever. So 52 and 40 for merchandise, shipping and other transport, you have 4 and 8. Then profit is 20 and 5. Gold shipment is 76 and 28. Other services, you have 2.5 and 7.5. Then grants is 22.8 and 7. Then foreign direct investment is 50 and 26. Other long-term capital, 254 and 289. Seems this one is kind of heavy on capital. Then other short-term capital, you have 221 and 238. And then treasury bills, you have 102 and 168. So what are you supposed to do? A, you calculate the balance of trade. Then B, you look for invisible trade balance. And then C, you look for the capital account, balance. Then for 2A is the BOP in surplus or deficit. So you have to explain. And then identify three possible reasons for your answer in 2A. So if your answer was deficit, right, then what are the three possible reasons you think might be responsible for a country to have, a deficit, balance of payment and so on and so forth. So like, that's everything I've got for now on balance of payment. So thank you very much. Read your textbooks, do a little bit of research, and enjoy yourselves. If you want to leave any of your answers in the comment section, then you're okay. So you're fine. Bye. Have fun.